Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm continuing the problems on cash flow statement. Last video I have completed four short problems on cash flow statement. Now I'm going to start the fifth problem in this video. So I have already explained you about the meaning of the term cash flow statement. It is a statement which is prepared to find the changes in cash position of an organization from one period of time to another period of time. In other words, this cash flow statement depicts the changes in cash and cash equivalent from last year to current year. On what counts the cash and cash equivalent changed from last year to current year? From where the cash inflows are there, where the cash outflows are there, all these things will be depicted in cash flow statement. So cash flow statement is very important financial statement for management. A number of decisions regarding cash management, regarding financial position, regarding the movement, all these things, all cash planning, financial planning, short-term financial planning can be done with the help of cash flow statement. All these things I have already explained in detail in the last two videos. So if you want the complete command on the topic of this cash flow statement, I suggest you to watch the first two videos. So if you have not watched, I suggest you to go to the playlist of my channel, select the subject financial statement analysis, select the topic cash flow statement. Watch the first two videos, you will get the complete knowledge about the meaning of different terms which are used in cash flow statement. So initial videos are very important. You should not ignore it. Watch till the end. Now I am going to start the next problem number 5. Before starting this problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout and keep it ready before start watching this video. Now, fifth problem. From the following information, you are to ascertain cash from operating activities. It's not a full-fledged problem of cash flow statement. It's short problem. Only it is asking you to find out cash flow from operating activities. So here what is given in the problem? Net profit is given. Last year was 1996 and current year is 1997. So we are given the data for 2 years, 1996, 1997. So net profit 1997, 70,000. Our current year is 1997. The net profit of the current year is 70,000. Now we are given debtors, bills receivable, creditors, bills payable, stock. So we are given current assets and current liabilities. Debtors, bills receivable and stock. These three are current assets. Creditors and bills payable. These two are current liabilities. Now see here. After calculating the profit, we have to make the adjustment for working capital changes. In order to find out the cash flow from operating activities, we have to adjust the current assets and current liabilities. That is working capital changes. Working capital changes. So how to make the changes? You have to remember the rule. In the last video, I have explained the rule. Increase in current liability, decrease in current assets should be added. So remember this rule always. Increase in current liability. Again I am writing here, increase in current liability. This is increase. And decrease in current asset. Decrease. These will be added. That's all. So remember till the last problem, you have to remember this rule. For adjusting the working capital changes, increase in current liability or decrease in current assets should be added. The reverse should be deducted. The opposite of this should be deducted. Example, decrease in current liability, increase in current assets should be deducted. So remember one rule, automatically the other rule you can be able to apply. Now, first of all, how to calculate? Here I am showing calculation of cash flow from operating activities. That is our heading. Net profit before tax and extraordinary item. These are the wordings which are specified by AS3, Accounting Standard 3. That's why we should write the complete sentence. Net profit before tax and extraordinary items. The profit given is 70,000 given in the problem. Now we'll take one by one adjustment. Adjustment for non-cash items. In this problem, we are not given any non-cash, non-operating items. In the coming problems, we will come across those non-cash and non-operating items. Presently, we don't have. So, adjustment for non-cash items, put a dash, no adjustments. So, same 70,000 will take operating profit before working capital adjustments or changes. So before adjusting the working capital, the operating profit is 70,000. Now we have to make the adjustments for working capital changes. Working capital consists of current assets and current liabilities. So actually the formula for working capital, current assets minus current liability. But here we consider current assets and current liability each and every item. First one, debtors. Just now I told you debtor is a current asset. Now see here, last year 42,000, current year 40,000. Last year 42,000, current year 40,000. Decrease in current asset. So decrease in current asset should be added. Decrease in current asset should be added. Here decrease in debtors. So here I have written decrease in debtors added. How much is the difference? 42,000 minus 40,000, 2,000. 2,000 over. Similarly, bills receivable. Bills receivable is also a current asset. Bills receivable is also a current asset. Last year 8,000, current year 13,000. So increase in current asset. So decrease in current asset you have added. So increase in current asset you will deduct. Increase in current asset should be deducted. So increase in bills receivable, deduct, minus. How much is the difference? 13,000 minus 8,000, 5,000 rupees, deduction. It is deducted, that's why I am putting in bracket. Bracket denotes subtraction, minus. You are deducting 5,000. Next comes creditors. Creditor is a current liability. Now you see last year 47,000, current year 50,000. Increase, increase in current liability. What we should be done? Add. Increase in current liability should be added. So increase in creditors, add. How much? 3,000. 4750, 3,000 rupees added. Bills payable is also a current liability. Last year 15,000, current year 10,000. Decrease in bills payable. Decrease in current liability will be deducted. Decrease in bills payable will be deducted. How much difference? 5,000 difference. The 5,000 in bracket. Bracket denotes minus. Next one is stock. Last one is stock. Stock is a current asset. Stock is a current asset. Last year 58, current year 65. Increase in stock. Increase in current asset should be deducted. Actually, decrease in current asset is added. So increase in current asset should be deducted. So increase in stock should be deducted, minus how much? 58 minus 65, 7,000. 7,000 minus. That's all. Now 70,000 plus 2,000 minus 5,000 plus 3,000 minus 5,000 minus 7,000, you will get 58,000. This is the cash generated from operating activities. This is a short problem. Cash generated from operating activity. Remember, whatever I have explained here in this problem, the same thing we are going to continue in the coming problems also. The rules will not change. The only thing you have to remember, increase in current liability, decrease in current asset should be added. The reverse should be deducted. That's it. Now, next problem I am reading out. Sixth problem. From the following, calculate cash from operating activities, just like the previous problem. During the year 1992. So we are given the 2 years data, 1991, 1992. Current year is 92. Debtor, current asset. Bills receivable, current asset. Creditors, creditors, current liability. Bills payable, current liability. Outstanding expenses, current liability. Prepaid expenses, current asset. Accrued income, current asset. Income received in advance, current liability. Then profit made during the year. Here profit made during the year, current year 1992, 13 lakh. Just like previous problem, profit made was 70,000. Now it is given profit made during the year is 13 lakh. So we take net profit before tax and extraordinary items, 13 lakh. No adjustments are given for non-cash and non-operating items. In the coming problem we'll come across, we'll discuss more. So here right now we don't have any non-cash or non-operating items, put a dash. Same 13 lakh, this is the operating profit before working capital changes. This is the operating profit before working capital changes. Now we adjust, make the adjustment regarding working capital changes. All are current assets and current liability. Whatever is given in the problem are current assets and current liability. See whether it is increasing or decreasing, then apply this rule. See whether current asset is increasing or decreasing and apply this rule. Then we'll get the cash flow from operating activities. First one, debtor. So debtor is a current asset. Last year 5 lakh, current year 4,70,000. Decrease in debtors will be added. Decrease in current asset will be added. So here decrease in debtors added. Difference is 30,000. Next comes bills receivable. Again current asset. Last year 1 lakh, current year 1,25,000. Increase in bills receivable deducted. Because decrease we have added. So increase we will deduct. So increase in bills receivable deducted minus 25,000. Next one, creditor. Creditor is a current liability. Last year 2 lakh, current year 2,50,000. Current year creditor is a current liability. So current year it has increased. So increase in current liability will be added. So increase in creditors added 50,000. Next comes bills payable. Bills payable is also a current liability. There is decrease. Last year 80,000, current year 60,000. Decrease in bills payable. So it will be deducted. Because decrease in current liability will be deducted. Increase in current liability added. So decrease in current liability deducted. So decrease in bills payable minus 20,000. Now outstanding expenses is also a current liability. Outstanding expense, current liability. Last year 10,000, current year 12,000. Increase in outstanding expenses added. Increase in outstanding expense, add 2,000. Next comes prepaid expense. Prepaid expense is a current asset. Last year 8,000, current year 7,000. Decrease in current asset, it should be added. So decrease in prepaid expenses. Decrease in prepaid expense added 1,000. Next comes accrued income. Income receivable, it's a current asset. Last year 6,000, current year 7,500. Increase in current asset deducted. Increase in current asset deducted. So increase in accrued income deduct minus 1,500. Take the difference between the two amounts. Income received in advance, that is a current liability. Last year 3,000, current year 2,500. Decrease in current liability deducted. Because increase in current liability is added. Decrease in current liability deducted. So decrease in income received in advance deducted minus 500. That's all. All the items, each and every item I have explained you whether it should be added or deducted. Now 13 lakh plus 30,000 minus 25,000 plus 50 minus 20,000 plus 2,000 plus 1,000 minus 1,500 minus 500. 13 lakh 36,000 is the cash generated from operations or net cash flow from operating activities. That's it. So this is the sixth problem. Now I am coming to the seventh problem. From the figures given below, calculate cash from operating activities. Exactly same. The balance of profit and loss account last year 1996, current year 1997. Previous year, current year's profit were given. But in this problem, current year profit is not given. Balance in profit and loss account is given. The balance in profit and loss account is the profit. So last year profit was 25,000 and current year profit is 1,55,000. So current year profit have increased. Current year profit have increased. So subtract 1,55,000 minus 25,000. 1,55,000 is current year's balance of profit and last year's balance of profit was 25,000. So how much profit have increased during the year? 1,30,000. 155 minus 25. 1,30,000 is the profit earned during the year. So we'll take the starting point. increase in the balance of profit and loss account. 1,55,000 minus 25,000, 1,30,000. Yeah, accumulated profit है. The balance of in P&L account was 25,000 and current year balance in P&L account is 1,55,000. So how much increased? 1,30,000. So 1,30,000 is the profit. To this we have to adjust for non-cash, non-operating items. We don't have any non-cash, non-operating items. So this is the operating profit before working capital changes. Now adjustment for working capital changes. Again, we are given current assets, current liability, just like the previous one. Debtor. Debtor is a current asset. Last year 45, current year 42. Decrease in debtors added. So decrease in debtors added 3,000. Take the difference between the two values. Then creditors. Last year creditors 20,000, current year 26,000. Increase in creditors added. So increase in creditors added 6,000. Bills receivable is a current asset. Last year it is 12,000, current year 15,000. So increase in current asset deducted. So increase in bills receivable deducted minus 3,000. Then prepaid expense is a current asset. So prepaid expense last year 1,600, current year 1,400. Decrease in current asset should be added. So decrease in prepaid expenses. Decrease in prepaid expenses added 200. Now bills payable is a current liability. So last year bills payable 18,000, current year 16,000. So current liability have decreased. So it will be deducted. Decrease in bills payable deducted 2,000. Outstanding expense is a current liability. Last year 1,200, current year 1,600. Increase in current liability should be added. So increase in outstanding expenses should be added 400. Next one, outstanding income. It is an asset. It is accrued income. Outstanding income means accrued income, income receivable. It's a current asset. So last year 800, current year 900, increase. Increase in current asset, deduct. So increase in accrued income, outstanding income, that should be deducted. Next one, income received in advance. It's a current liability. Last year 250, current year 300. So increase in current liability should be added. So increase in income received in advance, added 50. That's all the items I have explained you, which are the items to be added, which are the items to be deducted. Deducted means put it in bracket, minus. And added means without bracket. Now you simply sum up 1,30,000 plus 3,000 plus 6,000 minus 3,000 plus 200 minus 2,000 plus 400 minus 100 plus 50. 1,34,550 is the cash generated from operating activities. That's it. This is the end of 7th problem. Now I am reading out the 8th problem. Compute cash from operating activities from the following figures. So again, cash from operations we have to find out. Profit for the year 1988 is a sum of 10,000 after providing depreciation of 2,000. This is the new point. After charging depreciation of 2,000, the net profit is 10,000. That means this depreciation is a non-cash item. Depreciation is a non-cash item. So how much is the net profit before taxes and extraordinary item? 10,000. So here calculation of cash flow from operating activities. Net profit before tax and extraordinary item 10,000 given in the problem. Now adjustment for non-cash, non-operating items. One item is given. Previous problem there was no non-cash. Here one non-cash is there. Depreciation. So depreciation 2,000. Add up. So 12,000 rupees is called operating profit before working capital changes. Now we have to adjust for working capital changes. Exactly same way what we have done in the previous problem. Current assets, current liability. The current assets of the business for the year ended are as follows. So here we are given current assets and current liability. Sundry debtors, current asset. So last year 10,000, current year 12,000. Increase in current asset, deduct. Increase in debtors, deduct. So increase in debtors minus 2,000. Secondly, provision for doubtful debts. Actually, provision for doubtful debts will be deducted from debtors. it will be treated as a current liability. So instead of showing on the liability side, we are deducting the provision for doubtful debts from debtors. So actually it will show a credit balance, it should be treated as a liability. The provision for the doubtful debts should be treated as a liability. So last year it is 1000, current year 1200. So increase in current liability should be added. Increase in current liability should be added. So increase in provision for doubtful debts should be added. Increase in provision for doubtful debts added to a debt. Next comes bills receivable, current asset. Last year 4000, current year 3000. Decrease in bills receivable added, because decrease in current asset added. So decrease in bills receivable added 1000. Bills payable, last year 5000, current year 6000. Increase in current liability added. So increase in bills payable added 1000. Sundry creditor is a current liability. Last year 8000, current year 9000. So increase in creditors added. So increase in creditors added 1000. Inventories means stock, current asset. So last year inventory 5000, current year 8000. Increase in current asset, deduct. Increase in current asset, deduct. So increase in inventories minus 3000. Then short-term investment, it's a current asset. So last year 10,000, current year 12,000. Increase in current asset, deduct. So increase in short-term investment, deduct, minus. Outstanding expenses, current liability. So last year 1,000, current year 1,500. Increase in current liability, add up. So increase in outstanding expenses, added 500. Then prepaid expenses, it's a current asset. So last year 2000, current year 1000. Decrease in prepaid expenses, it should be added, because decrease in current asset should be added. So decrease in prepaid expenses should be added 1000. Then accrued income, income receivable, current asset. So 3000 last year, current year 4000. Increase in current asset, deduct. So increase in accrued income, deduct 1000. Income received in advance, it's a current liability. Last year 2000, current year 1000. Decrease in current liability, it will be deducted. So here decrease in income received in advance minus 1000. We have taken all the items. Some items are added, some items are deducted. The deducted items should be written in bracket, minus. So 12,000 minus 2,000 plus 200 plus 1,000 plus 1,000 plus 1,000 minus 3,000 minus 2,000 plus 500 plus 1,000 minus 1,000 minus 1,000. 7,700 is the cash generated from operations. So this is the end of problem number 8.